Hi traders, and welcome to the Technical Analysis Market Wrap on Friday the 17th of September. So in the blink of an eye, we've passed the halfway mark and we've reached the quadruple witching hour day, which is it's an exciting day for the markets when the four big options markets close on the same day. So we should see some volatility tonight, but we'll jump into the market and see if we can identify any opportunities before then and early into next week. So we'll have a look at the Aussie USD first up. We can see that weakness has continued on this one this week, and last night's action was no exception. So we can see that it's selling off the 20 moving average, which is actually quite a good strong level for it to be selling off. We can see now that it's broken the 73. It's sitting around that 72.90. It's got this little bit more support here that it needs to break through before we start to really get excited, but I think it's actually giving it a real crack. And like I mentioned during this week, yeah, the MACD, even though it did go up above zero, it didn't do it for a hell of a lot of conviction. You can see here that it's gone up there, and the signal line's almost flattening out already, even before the histogram starts to rise. So it's telling us basically that the 12 and the 26 are doing nothing, and they're very, very flat. And after a bit of a move down, yeah, doesn't really bode well for the long. So I'm thinking that although it can go long from here, it's got a lot of work to do. And what I mean by that is, all it's got to do from this point forward to start shorting it is to actually close below this level here on a daily chart. I mean, you can go to a 4-hour chart and see what that one's doing. Very similar. This has been a trading bonanza, and I know that I talked about this all week. You can see that it's pulled back to the moving average right there, sell off. It was another one right there, perfect sell off, an engulfing candle on the way down. Very, very easy trading, and the level that it got to is also actually very easy to trade. So you can do it one of two ways. You can either wait for it to pull back to the 20 again and continue on the sell, or you can just wait for the daily to break a bit lower, which, you know, sometimes we'll do that before it pulls back, get it closed down there, and then we're looking for the shorts. You know, this is sitting at 72.90. Like you can easily expect that the low 72.20 would be your first target, but the real target for this one's going to be around that 71.20 area that it reached previously. So I think it's got a bit more of a move in it than just that 40 or 50 pips, but you just got to trade it with caution and make sure that the rest of the market's actually moving at a decent speed to make sure that it can actually get there. On the flip side, if it's going to go long, it's going to have to do, to convince me that it's going to go long from here, it needs to do a 4-hour change of trend. So, you know, this is why I say this is the easy trade, because the easy trade, all it's got to do is make a lower high and basically a sequence on a 1-hour or a 4-hour. On the flip side, to go long, the 4-hour has to do basically a complete reversal of what it's doing right now and start printing higher highs and higher lows off this level. So yeah, that takes days to set up. So I mean, is it possible? Yes, but there's just a lot more work to do there. It's got moving averages everywhere right in front of it on the 4-hour, which are all obstacles. You got the same thing on the daily. You got a 20 and a 50 you have to contend with even before you actually enter the trade. So it's got so much work to do on the way up. A lot less work to do on the way down, and it's looking a lot more likely. So that's what the preferred trade is, but both of them can be traded, of course, if they do the right market moves. So good trading on the Aussie. Hopefully you're able to get involved in some of those shorts, because I think they gave us some really, really good opportunities, especially after this candle here. All right, we'll move over to the US dollar CAD. Now, the US dollar CAD has had an interesting week. It's been floating around the same level for effectively 5 days with not a lot of movement. It's hovering above the 20 moving average, which is really, really important. So to really understand what the CAD's doing, you have to go out a bit further. So I always like to go a bit further when you're confused on the daily chart. As you can see, this weekly, the MACD is about to break up, so we know momentum is starting to shift on the 12 and the 26, which is fantastic. We've got the 20 and the 50 looking like they're wanting to cross. They're converging on each other. They're trapping price, but price is actually holding up on the 20 like a dream. You can see here on a weekly, we haven't had a break below it for quite some time once it has been in it, and it's starting to push up above the 50 now. We want to see it close, obviously, above this level here. And if we get a close above this weekly candle action, we're looking for a 130 in the first instance. That's a standard zone that we'd be going for. You can see here that there's a lot of support and resistance from this point onwards. So this is where we're going for. Easy target, really. MACD has definitely got the score on the board to say that it can do it. And it's going to rely on a couple of other different factors, but of course, first and foremost, we need to close above this one. So when we get a weekly close above this candle, and it may well be tonight, if we get a big move in there and it gets to close by the morning, it's going to look really, really good for some long opportunities in the morning, on Monday morning. Now, failing that, if you want to go short, again, this is opposite to the Aussie. You've got a lot of work to do. It's got a lot of moving averages to break down before it gets there, and it has to consider a whole change of trends. It's got to go, lower high, lower low sequence to get interested in the short on this one. Otherwise, you're just basically guessing. So, it could do it. Obviously, it could. There's no rules to say it won't, but it's just got a lot more work. The easier trade is definitely to wait for the longer term move up. Okay, so good trading on the CAD also. US dollar yen is a good one finally. It did break out, even though there's MACD, the moving averages here that we've got the 20 and the 50 are flattening and the MACD is completely flatlined. We did actually see finally some action inside this channel. And that action brought about a trade yesterday. The Q&A session that we did, we isolated a trade, and I think it's already, we'll have to go back to it. I'll have to see if it's worked out. But that was basically came down to the support level of the channel, which is great. It did it basically with no momentum from moving averages or anything like that, because it did it pretty quickly. It finds itself at that roll reversal zone now. You can see that it's all resistance right through here, and it's sitting right there. This is what we isolated. We went down to a 1 hour chart. It was actually happening through the session, so I know a lot of people traded it. This is the line that we're talking about. This is the support zone on the bottom of that channel, and this is why patterns are so good at the bottom of a key channel. We knew we had a channel, like there was no question about that. And when the price gets to it and gets to it quickly, it can often form these patterns, and this was obviously a double bottom. The neckline was there, and our target actually was this red line here. I'll just move it over. That was actually our target. And as you can see, once it broke the neckline, it went straight up and did it pretty quickly, straight into the middle of the channel. So good trade. Well done everyone who got that one, because it was a pretty good trade. We isolated it and it came off a really good level. What makes these trades good is not so much that they work, because obviously you want them to work. It's when they work off a good level, and a good level is definitely that support zone on the daily. So finally, we've got a trade on the US dollar yen. It took a long time. We haven't been able to do anything, but we got a trade on it. But now it finds itself in that sort of scary zone again. So not much to do with it now. If you didn't get that one, it's just a bit of a waiting game again, and see if it continues on and pushes to the upper band of the channel, or if it's going to hover around here, wait for a breakout, either high or low, to be able to get involved in that one. Okay, we'll go over to the dollar index. Now this one's always trying to break out of this little zone, and it still hasn't been able to do it. But this week's been a very up and down week, as you can see. Every day this week has basically given back any gains or losses that it has put in, but we're looking at the first really big bullish candle off the week. So, and again, we know it's at a very strong support level, because it's got the 50 catching it, and it's got the 20 not long after. So, yeah, this looks good for the long at the moment. It's closing, well, it should be just about closed now. It's very, very close to closing on its high. Ideally, in a perfect world, we wouldn't touch it until it does actually do that. So whether the strength continues throughout the Asian session is yet to be decided. But again, we've got to be mindful. We do have very big possible reactions tonight, because the quadruple witching hour does generally jolt the market. It doesn't mean it's going to go up or down. It just generally means that it's going to be volatile. Okay, so you've got to be a little bit careful in that environment. But what I want to be looking for here, we know even if it breaks at this level here, we know there's big resistance right in front of it. Okay, and that does concern me a little bit. Don't worry about that. Like, I'm not just saying it's going to go make a new high and off we go. It has to get past this level here for mine. So even though technically if it closes up at just above this, it will be a lightning bolt. It'll be a lightning bolt that I wouldn't take just yet until it's got a stronger top end. If we get the close above there, which is around that 93.20 area, different story. Okay, a daily close at 93.20 or higher, then this thing is really seriously long, and it's got a long way to go too. So that's what we're looking for here. On the short side, it's got basically has to break down past this zone here. I wouldn't be touching this unless it was actually closing below 91.80 on the daily. So that's the target on this one if it's going to go short. So obviously it's a lot closer to the long, and it's opened up with a pretty good blue sky area if we can get past this level here. So look for the 93.20, maybe set an alert, and if we can get past there, then we start looking for that high 94 and beyond once it does that, because it's going to affect all of the dollar-based pairs, of course, and in a positive way. So, well, except the euro, which we're going to go to now. It's not going to affect the euro in a positive way, I can tell you that. Yeah, because if that goes long, this is definitely going short. So, look, this is one of those ones again where, the easy trade is for the downside, but it is at a level now. If you traded it yesterday, this is another one that traded as a community with the group. They all got that, and and it was a really good trade. I mean, when you go down to the 4 hour, it's actually quite obvious. But yeah, you can see here you had the lower high, lower low sequence, and you had the sell-offs down there. This one did reach a target, and this is why it's really important to look for those zones. Like you knew it would be easy to say, okay, well, we're just going to sell that down when it broke that support line and just keep selling it, but you had to know where to take the profit, and the take the profit area was definitely right where it is now. It overshot it a little bit, but you really wanted to be taking profit in this area. Why? Because you've got all of these here. You've got a whole, a week and a half of congestion here. We've got basically price action right through here, and you've got price action right through there. We know that's a very important level. So on the first initial break, you would fully expect that it's going to stop at that level there. Now, on the smaller time frames, I know a few of the people in the room were calling for the 20 moving average test to reshort it again. It's trying, and it nearly got there. It's not very far away at all. So that's what they're potentially looking for. Everybody's looking for shorts on the euro, right? That's the easy trade. So what we're going to be looking for and waiting for, of course, is a bit more maybe of a retest, and then come down and hit this level with a bit more momentum. So we'll see if we can get some more momentum pushing this one down at the time. And then if the dollar index does what it's supposed to do, this is going to go down to the 117, and it's going to go pretty quickly down to the 116.50 as well, with just a little bit of movement. All it needs to do is break out of that zone, and that will target that area fairly quickly. So set your alerts for a break, and we'll see how we go with that one. The long is a little bit more problematic. It's short-term target for the long is the 119. We've already had very strong resistance there. It would take a bit of a push to get up there again, and if it did get up there, then maybe looking at it at a different perspective. But to do that, for me to even be looking and contemplating a break long here, we're going to have to see a change of trend from this level, a 4 hour higher high, higher low sequence at the very, very least, and hit it with momentum, and then maybe you can push to the upside. But again, a lot of work to do in that regard. If it does it, great, and we'll trade it. But to me, the short is the easier trade. So I'll be looking for trading both if they unfold. But the short is far more likely to happen in a quicker time. So definitely set your alerts, because this one could go without you if you're leaving it too long. All right, we will go to the ASX 200. So our Aussie 200 is basically sitting at a level where it really wants to go higher, but it's just the market's not letting it. The indicators are not letting it. The world is against it, and for good reason. It is at a very high level. We are in a technical downtrend now. We've got the series of lower highs and lower lows on a daily, which we know is significant. The moving averages are bearing down on each other, the 20 and the 50. The 12 and the 26 have already crossed, as we can see here. Just to give you some context, the 20 and the 50 have not crossed since the market was at 59.50. Okay, so that's basically 1,500 points ago. So it's been a very, very long and sustained run. So if this crosses, it will be a significant event. Now, this line represents the horizontal line represents the role reversal zone. So it's obviously an important zone in itself, but it's also getting the 20 and the 50 there backing it up. So you can see why it's having trouble blasting through. What I want to see now is a close on the daily below this level here. Okay, so below the 37.30. If we get a close below there, it's going to clear out this area here. It needs to break past this zone here. It needs to break past there. And if it does that, the 7,200 is absolutely our target. It's still a good 120 pips away from there. That is the target if we get a close below here. A very logical target. And if it doesn't consolidate and break through that really quickly, then you can expect a really serious pullback down to the 6,900. So that's how big this move is, because it's been up and sustained. If we get that cross, we're probably going to get price action here, and we're going to get price action here. So all we need to do is set alerts for that event to happen. On the flip side, if you really, really want to long it, same deal, okay? The daily has to close above the moving averages, above this zone, and it needs to clear this 75.50 area. So it needs to basically close. When I say clear, it needs to close above there. So a daily has to close above that level, which obviously, that's a lot of work to do, right? So we're very well aware of that. It's a lot of work to do to make that happen. And if it does, we'll trade it long. But more likely and the more realistic scenario is we see the weakness come through here. We know we're in September, generally weak. Wait for a breakdown here and start looking for the short opportunities down there. And you can go to the 4 hour and start trading it back to the 20 moving average, because by then this would have already started to break down. And if you missed that initial burst, you can start taking trades to the 20 moving average and then shorting it from there. All right, so I hope everyone's had a great week's trading. We've had some awesome opportunities. A lot of the trades that we were talking about last week did play out in a pretty technically sound fashion. So hopefully you were able to take some of those trades and get in on them. Again, we're at pretty good levels, and just be very careful tonight, though. Keep your stops fairly tight because the market will be fairly volatile. It may go up or it may go down for little short spurts. So just be really careful that you've got sensible stop losses in place, and maybe keep the scalping hat on for a little bit longer until we see some of these key breakouts out of these zones. Thanks, everyone, and have a great weekend.